Hello, I'm Ben. Welcome to the channel. So today we're going to talk about 7 challenges that entrepreneurs face and some details around those challenges. I think in the modern world, a lot of people want to be entrepreneurs and a lot of people call themselves entrepreneurs. I've been a serial entrepreneur my entire life. I owned my first business at the age of 19. And before that, worked for my grandparents in their businesses as a child and a young man. And it led me to understand how the harder you work as an entrepreneur, the greater opportunities you could create for yourself and the more freedom you could create for yourself. And I spent 2 decades or a little better in the corporate world. The majority of that at just a few positions, but in those few positions, I got sent all over the place, all over the country to fix broken and underperforming locations. So historically, as an entrepreneur, I would own a small business and I would do something there. And that way you could impact a few people, but ended up getting into positions where I was going and using best practices and trying to stop people from recreating the wheel and going in and building best practices in businesses to help the different locations perform as well as other locations. And standardization of work came into play and sustainability around standardization of work. And so in that, it taught me a lot on the opposite side of entrepreneurship, on the team building and how to copy and replicate things from the best practice standpoint. And this is something that entrepreneurs, I don't think, are capitalizing on today. So we'll get into that too. But 7 challenges entrepreneurs face. We'll jump right in. 1, money is tight. So, I'll say this about owning your own business. If it's you funding it, or if you use venture capital, or if you have a periodic loan that gives you a certain amount of money by a certain period of time based on your deposits, cash is always going to be limited. Okay, unless you're the federal government, the cash will always be limited. No cash is no fuel. Basically, that's going to stall growth. It could impede customer service. That's the impact it could have if you're not aware of it and not paying attention. The solution to that is to court small investors and be a master in lean spending. So cutting costs. And the suggestion is this: when you start something, you're going to do it wrong a little bit before you figure out what works. So as long as you're learning from that each time and not making the same process mistake twice, you're actually saving money each time you do things, and you'll get better. Money is tight. My suggestion around money being tight is increase your personal efforts around sales and promotion. So depending on what your business is, that may look specifically different for your business. But in the end, if you're funding your business through your own sales, that is the only way to have a healthy organization. So as a consultant, I go in and I look at businesses and I do an assessment. Assessment is a substantial investment for the business. Typically, that costs between $6,000 and $10,000 for the business to have me come in and do that. It takes a week to 2 weeks. And I go through all of the specific information around the business. I mean, you got to have the bank statements there. You have to have your income, your outgo. You have to have everything that's in reporting, so we can review it line by line. The idea is that you want to have a true snapshot of what the business is doing. You want to know every little nook and cranny. You want to know what's been hidden, what's not. You want to make sure that there's validity between the bank account and the sales. So your AP and AR have to match up. Are your vendors getting paid? Are you paying as soon as possible? Are you paying with 90-day to 120-day terms? Are you a just-in-time operation where if someone shuts you off, you would not be able to meet sales demand? So that's the thing about money is tight. That can be much larger of a problem than you think it is. So the first part about being an entrepreneur is funding. And if you're in a situation where sales will be the life of the business and predominantly what you do is sales, then you may be in a great spot. You may have a business that has funding, no issues, because you're out there working the sales, and that's called a pull-through. So you're pulling the business through the process, and that is a more natural, healthier selection because you're not having to pull. You're not having to push, rather, on the business sales. So that pull that you create is fantastic because that means the business is being led by the sales, not by the production. Okay, sometimes businesses get upside down. They're overproducing. If you study MUTA, if you study the 7 different types of waste, that overwork, which is more than production, that is one of those specific pieces of waste, because every time you overproduce, that inventory that is finished goods is at risk. So it could become waste. You have to be careful for that. It's wasted effort because it's not sold. So that pull versus push matters. Number 2 is entrepreneurs typically are not aware of the competition, or the competition is fierce, or you represent a fraction of a percent of the overall market. A lot of businesses fall into that. Okay, if you look at, let's say, the firearms industry, for example, let's say AR-15s, there are thousands of companies that make AR-15s. Okay, so to differentiate yourself between your company and those other companies, it may require a specific amount of effort. And then if you look at other competition-based items, think about restaurants, fast food chains, hotels, all these things. You'll realize as you drive across the country, if you spend much time on the road, every place looks the same. Because the franchisees and the businesses that are successful replicate that across the country and are able to keep other businesses and kill small businesses because they have that down to a science. And part of the franchise space is you do it the way they tell you to do it. So the customer should be expecting the same product here as they would get to a location 2,000 miles away is the expectation. So that is how you handle competition. If you're a small business, competition is fierce. So either you have to start out with a quality, a service, or a price point that has people interested to start out, and then you have to sustain that relationship beyond that. A lot of times people look for a one sale close, and then they don't follow back up with the customers. My grandmother used to say all the time, a bird in the hand is better than 2 in the bush, saying that if you have a customer, take care of that customer, it will cost you more to replace that customer than to make them happy. So you have to look at that. The 80-20 rule is one that goes around that. So competition is fierce. If there's too many players in the game, the edge gets full of dust. Basically it gets weird fast. And you have to really separate yourself from that competition in some way, shape, or form. If you do it based on price point alone, that's not going to be a successful business. It's going to fold, because if you're selling it based on the lowest price and you're profitable there, what happens when inflation occurs? What happens when something else occurs or you expand the business? Basically, everything you do is going to be too tight because you're offering something for the lowest price. So that's what you have to think about. How is your competition going to impact your pricing? How is your quality and your service going to impact your pricing? You have to think about those items when competition is fierce. The solution to a lot of this is dominate a niche, innovate relentlessly, and build loyal fans. I call it raving fans. There was a book written in the 90s called Raving Fans. It was a sales book about how to take care of your customers in a service-specific industry. This is when software as a service became a big business point. And so there's a lot of books coming out on that. The biggest piece around that, if you can dominate in a niche and be really good at that and offer great service and a great quality product, you can keep people off of you and you sustain that. And if you introduce another product, then you do that slowly so you make sure you're not impacting the positive view of your company. Another thing is, when you talk about company size, sometimes, and this is what I say in my presentation when I'm assessing companies, we look at the profitability model. Most people have never looked at that before. So you're not taking an idea of what your profit is per product line that you have. And let's say you have 4 product lines. And let's say one product line makes the majority of your profit. It may not be the majority of your sales, but it's where your highest percentage of profit is coming. If you're being strangled by cost, if you're being strangled by other things and you can't keep up, it may be that you cut the other products and just do the one that's profitable because it's profitable and can sustain the business. Sometimes people offer too much. A lot of times in restaurants, excuse me, a lot of times in restaurants, they'll have a menu. When they're just starting up, they'll have a menu that's got 1,000 items on it. So they got to sustain all these products in the back to make sure they have the raw ingredients to make this. And the first thing I'll say if I'm assessing one of those businesses is cut this down to 20. You don't need to have all this on hand. You don't need to have all these choices. Pick the best in each different group, each different category. Pick the best. What you do the best. What makes the best profit. What has, going to have people coming back, and do those really, really well. And do that for 4 years. And if you're profitable and you've paid off the debts that you needed to pay off in the business, then at that time, expand your menu, expand your business, expand your product offering. So dominate a niche and do that aggressively. Constantly innovate, not necessarily just in products, but also in your customer service and in your complaint finding and follow-up. Number 3 is customers are predictable, or unpredictable rather, is what makes it difficult for entrepreneurs. Impact, no demand, no business. Sales are a roller coaster. And the solution is to validate early, listen obsessively, and pivot often. So here's my thought around customers being unpredictable. That's the life we live in. Okay? If you would have asked me, Ben, what should we do? I would say sell to rich people. Sell products that have big price tags, or the profit margin is huge. So I've been in the service business around mortgage, around insurance. I've sold gym memberships. I've sold supplements. I've done, you name it. I've been in that business. Okay. I own a couple of businesses right now. One's a small retail shop, and this retail shops are extremely hard to make a profit on in Texas because the property values in Texas go up every year. And so the rents follow that. So whatever profit margin you had in year 1, you're not going to have in year 2, and you're definitely not going to have it in year 3. So I got a business that's 6 years old right now, and now the same profitability that was fine 3 years ago, that was really great 3 years ago, is not enough to keep the thing afloat. So you have to constantly be validating the solution that you're offering. You have to be validating the profitability of the solution you're offering, and if that is enough to keep the business open, because customers are unpredictable. It's not just the customers, the economy is unpredictable too. Next is red tape is everywhere. Impact, regulations slow you down, and fines can sink you. Solutions, stay ahead, lawyer up, and know the game. That's an oversimplified suggestion, but here's my thought around that: is taxes alone can sink a business. Okay, if you're not paying your taxes appropriately and you're not doing it and you're not planning that on your budget and having that worked into your budget, you will fail. Okay. And when I see businesses that are out of control, one of the biggest question marks they have in their back pocket is, how much tax do we owe? Are we going to jail over this? Are they going to freeze our assets over this? And I've seen businesses go 3 and 4 years without paying taxes. And those typically are larger businesses. Then I've seen small businesses where when they're 3 months behind, the IRS will freeze their bank accounts. I dealt with that with a business just a few weeks ago where the IRS froze all the bank accounts because they were 6 months behind, when I've seen companies go 3 and 4 years without paying taxes. So just know that there is going to be red tape everywhere. Taxes are a consideration you must consider, and you have to treat it as an overhead expense. If you don't, and you let it go off book where you're not paying attention to it, as an entrepreneur, that can put you in harm's way, especially if you're the salesperson, especially if you're out selling, you're busy doing other things where you're not specifically looking on the paperwork side every day. That can get you in a lot of trouble. And a lot of time, doctors and dentists and psychiatrists and physicians have those issues because they are the business. So what they'll do, especially private folks that have their own private firms, will work all day seeing patients, and then they're working from 7 p.m. to 10 p.m. trying to get the book work done. Instead of hiring somebody to handle that for them professionally because they can't pay $50,000, $60,000 a year for a bookkeeper, they do that themselves and run the business in the ground. The point is, if you look at the best practices, it's going to suggest how you get through this, red tape included. The next one is great talent is hard to find, and I'll move that up. It's even harder to keep. Okay, great talent is hard to find. Impact, weak team, weak company, no execution, no success. Also, if you keep bad teammates, your good teammates will leave because they won't like the environment that the bad teammates create. So the solution here says hire visionaries, build culture, and reward excellence. That's ridiculous. You can't hire a visionary in every position. What you do is you have to hire someone qualified in those positions. So if you got somebody who's done this position for several years and had success at it, that's who you want to hire because they know the drudgery and the beatdown of the day. They expect it. It's not something new, and they have leather. They've worn their skin up to handle it. They're not thin skinned. They can handle what comes. Building a culture and rewarding excellence is important, but remember that you're going to pay and promote on attitude. So if you got somebody that thinks they're a top dog and they do really well in their territory, but they're running off everybody else in other territories, at the end of the day, you're not hitting the business you could because you're basically wrapping your business around one person. You can't do that. Another thing is, if you see that turnover is more than 20%, if a company's turning over 100% of their teammates, I just learned this past week about a company that I've had a prior relationship with that's done that again, turned over a teammate 100% 2 years in a row. When you do that, that says your culture is not wrapping around your teammates. You've got a separation between those that lead and those that follow. And the message from the top is not getting all the way to the floor. So at the end of the day, don't hire visionaries. Hire people that have the talent to do the role that you need, that are good, motivated individuals, because then you can pay, and from a production standpoint, you can pay by the piece. And so the more they make that meets the quality, the more they produce that meets the quality spec, the more they get paid. When you do that, you can hire 2 employees and they will do the work that 6 employees do elsewhere just because they're going to get paid aggressively. And they'll act more aggressively because they get paid more aggressively. So great talent's hard to find. When you find it, keep it. Find out what it takes to motivate those individuals, motivate them, make sure they feel appreciated, and keep them, because it's going to cost you. You reset every time you lose a tenured teammate. You reset. So you don't want to reset that often. You definitely don't want to turn on those people every year. The 6 is scaling can break you. Growing fast, messy systems, loss of control, and chaos comes from growing too fast. The solution is automate, streamline, and scale with precision. Here's my suggestion around that. So scaling can break you. Before you decide to scale up and get larger, before you decide to reduce your prices and produce 75% more than you produced last year, before you do things that are going to lead you into a corner that you don't know how to fight your way out of. So let's talk about that, for example. Scaling can break you. I knew a company once that reduced the prices on their products because they thought at a lower price you'd have more demand. But in that same thought process, you may have 20% more demand, but you've just had to produce now 35% more to meet that demand than what you did in any record year prior to that. And then if there's taxation for each unit and shipping for each unit and the materials that go into building each unit, now all of a sudden that decision has gotten much larger than the increased sales number that you thought you were going to get. So here's how you scale appropriately. You have a price model and a procedural model in place. You leave it in place for about 3 years. You try to thin out, cut waste, streamline it. You try to do all those things every year for 3 years. Not to reinvent the wheel, but just cut off the fat. Get it to where this thing is smooth, where you've got vendors to get your stuff in time, you're getting your orders out on time, the quality meets spec 100% of the time. You're not having, every other one that comes off is going to be a fail. And once you do that, you've automated, you've streamlined, you have your processes well understood, you teach, coach, train, discipline to those processes so you know they will be sustained. Then you can look at scaling, because now you're trying to expand what you already have into a larger footprint. So in production sites, that could be add a shift. So you start with 2 teammates on the production line, then you have 4, and then you have 6, then you have 8, and if 8 you're full, then great. So now you got a second shift, and you can do it again for third shift. And you scale it up 20 to 40% at the time. You just have to be sure that scaling is the specific need. So in some presentations that I make, I show the Incredible Hulk and I show Mighty Mouse. Okay? Both of them are superheroes, right? But what's most important? Is the gross income most important, or is the net profit most important? Because you may pass an equilibrium point in production where you're now driving down profitability because you're making more than what you need to make. You're spending more on making extra units beyond what you have to spend. So you have to understand, are you fighting for gross income or are you fighting for profit? Sometimes smaller is better because it generates more profit. And I can compare that as I used to run a smaller site in a company that I worked for about a decade, and larger sites couldn't meet the EBITDA, couldn't meet the profitability that we had. And so when I increased my shifts, I stayed with the same head count to support across shifts. And so with less people on less shifts, I was making more profit per item we touched than any other site in the country. And year 2, we were better than any other site in the world. And so then we sustained that for 6 years. And it was known at that point that we might have some things going right in the facility. The team was bought in. They were the safest team I've ever run. They went 5 years and some change without an injury in a warehouse manufacturing environment, which is very difficult. But the solution there was the people. We didn't have turnover. All my people in that location were professionals. They knew what they did. They understood how what they did benefited the bottom line for the plant and the company. And man, they came in and did it every day. And if they weren't feeling it that day, they would go home and take a break and come back the next day. We took care of each other. And so the plant hit heights that no plant had ever hit before. And the safety records and production records and quality records that that location set will stand forever. And that plant and that performance is what got me sent all over the country for that company, fixing other sites to replicate what we did at my home site. So know that scaling can break you, but if you know what you're doing, scaling can then multiply your output if you do it appropriately. The majority of the time, people don't do it appropriately. And the last one is the economy hits hard. The impact, recession, sales drops, panic rises, survival mode. Solutions for this is diversity of income, cut fat, and build resilience. Diversifying income could be dangerous, but cutting fat to build resilience, cutting waste, getting lean, if you're doing that as a business, you will beat most other businesses. If you pay attention to how you're doing things, you keep the quality good, you keep the production number good, you keep the service time good, the customer service, the customer handling good, you will see the opportunities. And in those opportunities, if you just cut the waste, you can still produce and sell the same amount and be making more money each year. You can increase your profit by 2, 3, 7, 10% a year just by cutting out the waste and doing what you do a little bit better. And when you do that, the impact that the economy has is much smaller. Now, if you have to have a bunch of raw materials to make your products, your goods, or your services, then that is also going to hit you there as well. So that's something to know about. And sometimes diversifying product lines could be a greater risk than it needs to be. So that would be my thought on that. The economy does hit hard, but you should be aware of, as an entrepreneur, you should be aware of what your industry is doing. You need to stay on the edge of what's there and try to pay attention to what's around you. I have a couple of books, if you're thinking about an entrepreneur, that I've talked about before. The E-Myth Revisited is one that you need to pick up if you're thinking about becoming an entrepreneur. In this book, it talks about some of the things that go wrong and things that you don't think about, basically saying just because you like cheeseburgers doesn't mean you need to own a restaurant, okay? So at the end of the day, that's something you have to think about. And then another one to look at is Good to Great. Because if you look at the companies in Good to Great, not only did they go through recessions and hard times and layoffs and those type things, there was a ton of other environmental issues around those companies that made them successful when other companies were failing. So there's two sources I would recommend to take a look at. Hopefully you enjoyed the video. If you did, please like, please subscribe, please share if you have some folks that may enjoy this as well. As an entrepreneur, the biggest point is to do what you do better than anyone else can do it. And if you're in an industry that's covered up with a bunch of people, then there has to be something that separates you and sets you apart. So bigger is not always better. Remember, you're trying to sustain team, make your people happy, because that's what's important. And then at the end of the day, you want to focus on profitability, not gross income. Okay? I'm Ben. Please like, please subscribe. Be good.